Is this a sign for the market here after this liquidity injection from the PBOC that perhaps all these fears about contagion and a big credit event, we can actually see that could be the worst is behind us now?
I mean, I'm not so sure we can make that assessment because the market has its own emotion, its own mind, as it were. But what we can say is that it's very likely that this is not a Lehman moment. This is an action to avoid a Lehman moment, which is why we have to see this in the big context, what China is trying to do. And I think all the actions that we've seen so far seem to indicate that this is a controlled explosion, as it were, and very much with the view that to avoid a future contagious event rather than one that's likely to cause it.
Okay, well, let's move things along then, and let's look at, because we seem to be reacting to news day by day, and Mark, you see that in price action, you see that in high yield and investment grade. A week from today, China enters a very long, week-long holiday. Not that that is enough time to restructure Evergrande, even close to it, but do you think 5-6 days is enough for China to pull back this story further from the cliff so we go into that long holiday safe and calm?
I mean, I think you mentioned earlier in your program, it doesn't look like there is much panic onshore. And actually, even within the credit market, the Asian credit market and the dollar market, away from the property sector, there hasn't actually been much contagion. So I think, the worries, as a lot of people have said, is maybe somewhat more of a concern that what may happen rather than actually what we've actually seen so far. And remember, these bonds have been traded flat in the market for a couple of weeks now. So this is them not paying interest shouldn't really be a shock to people.